you know how many publicly held Fortune 500 companies use whole life and the millions of dollars the boards of directors authorize for that
And it's
stuff
really
to fund
sad
executive
that they're all
benefits?
getting screwed at that level.
Well,
It really is, because it's garbage, Russ.
Have you ever heard Dave Ramsey rip into insurance, specifically whole life insurance and infinite banking? Well, guess what? There's a video that came out that I just had to share with you guys. He's ripping on this insurance agent, and you know what? He won. Dave Ramsey won for sure. So check this out.
Dave, I've posted some things on your website in regard to insurance philosophies you put online. And having been an insurance broker for about 35 years, there are a few misstatements that are on there that I'd like to use the air as a chance to maybe either clarify with you or maybe get some clarity from you on. May I do that?
Sure.
Okay.
Here it begins. I'll just say this, though. The way he's already starting out doesn't sound too confident to me either.
Number one, you have said on your website that term insurance is the best and the only kind of product people should buy in all instances when they need life insurance.
Now notice at the bottom of the screen here, it says, big bar, says sign up for term life insurance today. Click the link below, right? This is what Dave Ramsey's selling you. Do you think he might be making money off of this insurance company? Yes, he is telling you to buy term, which insurance companies have even told me privately that is their number one profit-making insurance that they have, even over whole life like this guy's talking about. So I think it's ironic that Dave Ramsey hates debt, has ownership in a mortgage company, hates life insurance, but sells it all the time. Crazy, huh?
And what I can tell you is that we do not recommend whole life insurance across the boards. We recommend life insurance situationally. There's no two needs, no two situations that are pervasively similar.
So this is good stuff. This is general stuff that every insurance agent, financial advisor should know. The right way to do it, and when you're talking about suitability, legally speaking, it's not one size fits all. Even though Dave Ramsey kind of does that, he, of course, is outside those guidelines of what's legal and what's preferred.
I disagree when you say there are no two instances that are the same. There are basic principles of mathematics and basic principles of personal finance that are always the same. For instance, I would tell you, there is never a time that you would use a credit card. You can't say that you can't convince me that there's certain times you should use a credit card. They suck.
Can't convince you, Dave, but it doesn't mean it doesn't mean it's good in some situations. I love using my credit card all the time, and I get free mileage, Sky Miles, and everything else with my Delta card. Advertisement for Delta there, isn't it? But it's true. Like he says, it's always. Now, notice that Dave Ramsey says principles, right? When I define principles, I see principles as something that's always true. He's trying to do the same thing, but I see principles as something that's much deeper. For example, I believe a principle that you should always live within your means is a true thing. Live within your means. That's not saying you shouldn't use debt, right? It's saying live within your means. Make sure that you produce more in income than what you're spending in expenses. That's kind of common sense. That's a principle. That's always true. What he's saying is, well, credit cards are always bad. Is it? Is it always bad? That's interesting, Dave. So now he's trying to talk about how life insurance, somehow there's a principle here. Although this sounds not like a principle, this sounds like a strategy. Credit cards are a strategy, not a principle. So let's go into it.
They're a bad product. They don't work. And I think the same thing's true of whole life.
All right. Well, let's take it a little bit further. Number two, there seems to be some question about the cash value of a life insurance policy as being a bad investment. And I won't get into the issue of performance, but I think the big thing that you need to realize is this. The cash value is not there because insurance.
Actually, I think this insurance agent should address performance. I think that's a very good thing to bring up. Okay, keep going, insurance agent.
Insurance companies are creating a standard of return or investment that is deemed to be poor or is deemed to be immovable. The cash value
then why would you do it?
Policy is there. It's a function of law. It involves.
So why would you put extra money into a policy to create cash value if the cash value has no standard of excellence at all on the rate of return?
Good question, Dave. I agree with you on that. Keep going.
Well, you didn't let me finish. Those policies historically get better as they get older. Okay, the cash value of a life insurance policy is a function of state law. It's a function of statutory reserves.
Sure.
And also from an actuarial standpoint, it's used to keep premiums level indefinitely. Why do you think?
So let me ask you guys right now, do you understand anything that insurance agent just said? If you're an insurance agent, maybe. But when he started talking about, he started going to the tables and actuarials and he started talking about a function of this or that. This is exactly why insurance agents don't win in a debate like this, because all they're just pulling crap out of their butt. They make it sound like they know what they're talking about, but like what I've said in other videos, where often people that are too nerdy, they talk a certain language, a certain lingo, but then they almost don't know a subject well enough. They hear it from somebody else. They say, "Oh, that's good," but they don't quite understand it. So then they just spit out this garbage that makes it sound awesome, but already Dave Ramsey's got an advantage over this guy because he's just saying crap right now.
Term insurance is so cheap? Because term insurance does not have or maintain a legal reserve affixed to it.
Well, sure it does. They have to have cash reserves to support. Otherwise, the state won't license the term insurance company. Now it's a 20.
That's true. They do have to have reserves regardless of what they're selling. Term insurance, life insurance, it doesn't matter. They gotta not only have to have reserves, they also have to have reinsurance, where those companies, they're really paying for insurance to protect them in case they go out of business.
20-year level term insurance is about 1/5 or about 1/20th the cost, about 5% the cost of the same amount of whole life is.
That actually is not always true. He's very much overgeneralizing that one right there. So negative point for Dave.
You're right, but from an actuarial point of view, whole life is considered to be a product priced indefinitely that does not have.
Yeah, but it never stays in place indefinitely.
That depends upon the person, and that depends upon the situation.
All the research shows that they cash them out like crazy.
Not every.
They do if you tell them to, Dave. That's why people lose their money in them. Okay, keep going.
Everybody?
Yeah,
I can tell.
yeah. The
The
vast majority do. But let's just pretend you kept it for your whole life. Why the flip did you need it for your whole life?
How about some things called estate taxes? There are people who do, when they die, see their family incur a substantial financial loss.
And so in order to cover estate taxes, I need to get ripped off for 60 years in a horrible financial product. That's your theory.
Let me just say this. If you talk about the difference of investment, why don't you talk about the difference in, for example, in attorney's fees? There are attorneys who charge $300 an hour versus $700 an hour. You don't tell somebody to invest the difference in legal fees to see if they come out ahead, do you?
Huh? I'm failing to see the point. I think Dave has the same reaction I have. Like, why are you going to the attorney? It's almost like this guy's just jumping around. Again, same problem with most insurance agents I know, especially if they've been in the industry for 35 years like this guy. Listen, you know too much that you just come out with all this random stuff. You don't even address the first thing you just brought up. Like, you should keep digging into really what's Dave's concern. You're paying less the cost. Okay, great. Well, is there a time where you actually make more money with the whole life? Do you actually get more for less? If we're looking from an investment standpoint, how do we know that? He doesn't address that.
Of course I would, if the actual if the actual legal advice was exactly the same.
Yeah.
Well,
if you die, you get paid with term insurance. Your beneficiary gets paid. Pretty simple formula. If you die with whole life insurance, your beneficiary gets paid only the face amount after you've paid 20 times more for the policy.
I can refute that very easily.
Well, you can't.
If a policy is arranged properly, a person can receive not just the face amount of the policy, but in addition, they can receive the value of the cash account.
No, they can't. Not unless it's not unless it's an AB universal, in which case you paid more for it to start with.
Okay, so I'm going to stop here because Dave's got some, points he's trying to bring up, right? He's saying, one, you're going to pay way more for whole life than you will for term. I find that to be completely 100% false. All right. Now, it might be true that traditional whole life policies, you can pay into them and they have very little cash value. They have a big death benefit. But when you really look at the numbers of what you pay into it versus the death benefit, even over time, you do get a better deal with whole life if you live longer. Now, if you die early, and hey, if you live on rice and beans, maybe you will. Good luck to you. But if you keep following that advice, you might die earlier. But the truth is, term insurance, if you keep renewing it, especially if you do have a bigger enough estate, let's just say that Dave Ramsey's advice actually works for you. You have a big enough estate, you're considered to be rich or wealthy. Guess what? Uncle Sam will want you. The government will put you in that category and say, hey, maybe we'll only give you an exception for X amount of dollars of your estate, but the rest of it, you're going to pay 45% tax, which is kind of what we've been seeing. This doesn't mean Dave's point's bad about whole life, because there are whole life policies. You set them up the traditional way, they do become a bigger waste of money. But there are better ways to do it. And Dave's going to bring this up. And one thing other Dave brought up too, when he's saying you get your cash value and your death benefit. That's another debate you hear online a lot. People say you lose your death benefit when you die, or you lose your cash value when you die. There's some truth to that. It's a half truth, depending on how it's designed. And then Dave goes, well, listen, AB, that's universal life. He's right. A B type of death benefit is actually one that gives you the cash value and death benefit, but it is more expensive on the insurance cost. So I generally don't have people recommending that. I used to do that all the time though. With whole life, it's a little bit different. You can actually get more than what you've paid in with cash value and a death benefit too. But that's not going to come up in this debate, but it is possible to get more. I've even shown that to guys online that were trying to troll around saying this very thing on these videos.
You said that, you talk about whole life as being such a horrible product. And again, maybe in your mind it is, but can I ask you this question?
Mm-hmm.
Why is that particular product that you think is so deplorable, bought by many publicly held companies and privately held companies to fund buyouts of corporate stock? And
There's a lot of buy-sell agreements that use whole life. And you know why? Because people like you sell that crap to them.
No.
That's exactly why they do it.
Okay. Let's go with that argument that Dave is talking about here. So he's talking about if you have a company, a lot of companies, when they have partnerships, they will buy life insurance on each other's partners. And if that partner happens to die, then the life insurance pays out to buy out their share of the partnership. So the other partner can get it without having to pay out cash out of pocket. That death benefit gets paid to the family or to the heirs, and then the partner gets to take over those shares, right? I didn't plan for that to rhyme, it just did. But so in any case, so first off, when Dave says like, well, it's because idiots out there like you sell it, right? Okay, so he's talking about now that term life insurance, right? You could be funding a buy-sell agreement with that. That's absolutely true. That's assuming, of course, that you're going to actually have a term insurance last long enough. So when he's saying term can do everything, well, not if you live long enough. No, you'll end up paying more than your death benefit into your 80s if you keep trying to renew your term insurance. That's something you'll see over and over and over. You keep trying to get your term to renew, you will pay your death benefit by your late 70s to early 80s. Well, then you might as well just have cash. But maybe that's what his plan is. And just so you know, that's exactly why insurance companies love to rip you off with just getting term insurance. They're the ones that taught Dave Ramsey this, because they know, hey, he's going to be keeping it there forever, right? Like, hey, if you're going to keep it until eventually the point when you're about to die, you can't afford to keep it anymore. And then they're off the hook and you have to pay with all your own cash to be able to pay the taxes, pay your family, pay any bills you've got, and that's it.
Well, let me ask you this. Do you know how many publicly held Fortune 500 companies use whole life and the millions of dollars the boards of directors authorize for that?
And it's really sad that they're all getting screwed at that level.
Well,
it really is, because it's garbage, Russ.
Very prestigious business schools. I think they know a little bit more than a layperson.
Well, they may or they may not. But the bottom line is that at the end of the day, dude, it is the payday lender of the middle class. It's a horrid product. When you pay 20 times more for the same amount of coverage to build up a cash value that you never receive, because when you die, they pay the face amount, Russ.
They pay and can pay, and I will refute that.
You can refute it all you want, but you're wrong.
Now, when he's saying that all the Fortune 500 companies are idiots and that they bought it from people like that, and somehow that Dave is superior in intelligence to them, bless his little Tennessee heart, I find that hard to believe. Okay. Now, they never really got to the heart of the topic because he ended up hanging up on him. And I don't think this insurance agent would have really gotten to it, because at the end of the day, they're just talking about the death benefit. Notice that they're talking about cash value, but they really don't. The cash value is one of the coolest aspects that come with whole life, because I can take that cash. I can do it and not design it like the way that maybe this guy's done for the last 35 years. I don't know how he's designed his policies, but I can already tell you, every type of insurance agent I've run across, they design them where they usually charge you too many fees and costs. Maybe that's where Dave is getting his little 20 times thing, because that's true in some cases. Depends on age, all this other stuff, right? But it sounds great because Dave is confident in what he's saying. But the truth is, he doesn't truly understand how we're doing this with the max ROI infinite banking. The reason that I do it and I don't just buy term, by the way, I do have term too, and I have whole life for myself. The reason I have whole life is because one, I can store cash and make a lot more money than I can in that stupid bank account he told me to keep it in. Two, I don't wait till I'm dead. That's the thing. They keep arguing about the stupid death benefit. And yes, that's good to have. And we just talked about that. But it's the cash value if you have it build up fast enough, which he didn't address. Even when Dave said paid up additions, and he's like, no, not that. Well, they went past the thing that paid up additions allows you to build it faster. Dave has heard about paid up additions. He's heard about infinite banking. But still, when you talk about buy term invest the difference, I'll tell you, it's true. When you buy term invest the difference, you will win with buy term invest the difference for the first 5 years. Once you get to about year 7 or 8, especially with the way we design them, if you're going to invest for more than say 5 or 10 years, that's when the whole life starts pulling forward. By the way we design our policies, the whole life pays for itself after the second year. So by the third year, maybe the fourth year, if you're not in great health or you're older, at least by the third or fourth year, it's already paying for itself. So it's like free insurance at that point. It's growing and doing it tax free versus your crappy little savings account that you might use to invest in his crappy little mutual funds. So, anyways, I know that Dave doesn't get everything. He doesn't understand it all. The problem is he acts like he does. And the problem with this insurance agent is he acts like every other insurance agent that I've met, where they get too complicated. They get hung up on all these details and things that don't really matter and none of us really care about. At the end of the day, we want to know that our money is working for us now. That is why you want to have a max ROI infinite banking policy, not the traditional crap that both Dave and probably this guy, this insurance agent, is talking about. That's what you really want to go for. So guys, anyways, you got questions. Of course, you can always go to our playlist on our YouTube channel, Infinite Banking. You can go deeper down that rabbit hole. There's lots of ways to do this, lots of ways to be able to make money right now in those first few years where you can actually still really pay for insurance and invest the difference too. There's a way to actually do that, even with whole life that they're not addressing. If you really want to see a really interesting video with Dave Ramsey, check out the one he did with Graham Stephan, where he's talking about how Graham's portfolio is set up and see what he's investing in. Hear what Dave has to say and where he actually goes against his traditional advice. Makes you wonder if he's going against his advice on life insurance in his real life too. Check that out.